Today we're going to be talking about a company called STAG Industrial. It is a REIT or real estate investment trust. I previously made a video on this company back in May, which I'll link in the pinned comment below. So if you enjoyed this video today, please don't forget to like, subscribe, and leave me a comment below if you have any questions. If we just do a quick comparison to the video I had made back in May, as you can see here, their enterprise value was around 6.8 billion. They had square feet of 98.2 million, and they had 492 buildings. Fast forward just a month, this isn't even updated to the present, so it could be even higher, but as of June 30th, enterprise value was 8 billion. They had 100 million square feet and 501 buildings. So this is a company that's growing, and if we just compare where they were when they IPO'd back in 2011, in just 10 years, they have grown tremendously. At the start, they had 14 million square feet. Now they have 100 million. So about a 7x since then. We'll come back to this slide later. Another major reason to be excited about this company, which I touched on in the last video as well, it's obvious that we're going to need a lot of warehouses to keep up with the demand of e-commerce. And the CNBC article here stated the US may need another 1 billion square feet of warehouse space by 2025. E-commerce is obviously only going to continue to grow from here. And STAG, actually about 40% of STAG is involved with e-commerce. So I can see that percentage continue to grow. So STAG reports their next earnings on October 28th. So if you're interested in hearing how that goes, definitely don't forget to subscribe to the channel. We'll be talking about it. This company's really come a long way since IPO, as you can see. They've greatly expanded. They've paid down their debt tremendously. Their debt to total capitalization ratio used to be 46.8% at IPO. Now it's only 23.6%. Tying into that e-commerce trend, 40% of STAG Industrial's portfolio handles e-commerce activity. So as this grows, this should also help STAG Industrial continue to grow. The U.S. industrial market is more than $1 trillion in size. As you can see here, STAG's share of that is only 0.5%. So there's plenty of room to grow, and I can see a clear path for growth when you think about those e-commerce trends. As you can see here, when it comes to their acquisitions, they're not just buying up everything. I mean, they're really taking a calculated approach here, because when they went from looking at over 1,250 potential investments, they end up closing on only 39 of those. So they're very selective. They're making sure that these are high quality properties that meet all of their criteria. They're very well diversified. Their portfolio includes exposure to 45 plus industries, so they don't have all their eggs in one basket, which is great to see. Less than 30% of their leases expire through 2023. Their top tenant, which is Amazon here, makes up less than 4% of their ABR, annual base rent, and that's Amazon making up 3.9% of their portfolio. Now this is what I really like too, is you can see their top 20 tenants make up less than 20% of their annual base rent, so they are very well diversified. They've got 85% of their tenants bring in revenue of over 100 million. So these are huge companies. They're not going anywhere anytime soon. So here are 3 reasons that give them such a compelling valuation. They're growing their income. They've got a long history of successfully managing this portfolio and continuing to grow. If we look at their funds from operation multiple, STAG's is around 20.5 times, whereas their peer average comes in around 33 times. So based on that stat, you could say STAG is more cheaply valued than many of their peers right now. And then one last thing that I really like about this company, and then we'll take a look at the stock chart. So most of STAG's competition comes from local real estate investors who do not have the same access to capital that STAG does, as they're a publicly traded institution. So this makes it much easier for them to, raise capital for new properties, probably get favorable debt. So this is a significant advantage, I think. So we take a look at the stock chart here. When I last did the video back in May, STAG was trading at around $36. It has run up pretty considerably since then, and I think this is a great buy. Anywhere under $40, I would probably buy more shares. Great dividend yield. They pay it monthly. Market cap of over 6.6 billion, so it's a good mid-cap play. So if you're looking for some diversification, getting into some industrial or REIT type plays that are consistent, that are growing, that are going to give you cash flow every month, then this is a great company to check out. So if you enjoyed the video today, please don't forget to like, subscribe, drop me a comment below if you have any questions. This is Vinny from the Investment Club, and I'll see you next time.